ES gapped up 174 points today, a 2.61% surge on the Iran ceasefire. This was one of the largest single-session moves in recent memory. VIX collapsed over 20%, oil crashed 17.65%, and institutional positioning flipped $10 billion bullish overnight. Let's break down everything that moved markets today. The catalyst was a geopolitical breakthrough. Iran agreed to a 2-week ceasefire after 800 U.S. strikes destroyed an estimated 90% of their naval capability. The Strait of Hormuz was reopened for safe passage, removing the central supply shock that triggered yesterday's sell-off. Military officials framed this as a decisive victory, but also made clear this is a tactical pause, not a permanent resolution. The energy complex was crushed. WTI crude dropped 17.65% to $93.01. Brent fell 13% to $94.50. European natural gas futures collapsed over 20% as the supply anxiety evaporated. This was the largest single-day oil decline in months, and it pulled the entire inflation premium out of markets within hours. But cracks appeared almost immediately. Hours after the ceasefire, a Saudi Arabian pipeline was attacked. The east-west corridor feeding Red Sea export terminals was hit. Markets dipped on the headline, and oil briefly rallied. This is the key risk. If the ceasefire is fragile, the entire risk-on thesis could reverse just as quickly as it started. The broader market reaction was extraordinary. VIX collapsed from 25.77 to 20.40, a 20.84% decline and the second largest single-day drop in this range ever recorded. NDX jumped 3.37%. MSCI Asia Pacific rallied 4.9%. European futures were up 5.5%. This was a synchronized global risk-on event. Options data showed unprecedented bullish positioning. $10 billion of positive gamma concentrated at the 6,800 level. Call buying dominated. ES June 7th 200 calls worth $893,000. 0 DTE 6,750 calls at $941,000, and massive VIX put buying at $3.3 million. Institutions are betting this rally has legs, and that volatility stays crushed. The technical structure is stretched. The oscillator reading hit 92.62, an extremely extended condition. Price gapped above the Fibonacci 1.618 extension at 6,794 and tagged the 2-point extension at 6,848 before pulling back. The 40-day moving average sits near 6,716, well below current price. All structural resistance has been broken in a single move. Buyers are in control, but the extension is real. Key resistance levels above. 6,848 is the Fibonacci 2.0 extension, the overnight high. 6,900 is the combo strike zone and a strong psychological level. And 7,000 is the absolute gamma strike near the 52-week high at 7,002. The options wall sits at 67.39, where dealers are short calls and will resist through hedging. Support levels below. 6,790 is the Fibonacci 1.618 extension and first meaningful support. 6,750 is the equilibrium zone and prior week high, the key level for session direction. 6,703 is the secondary combo strike zone, and 6,600 is the dealer positioning trigger. On the calendar this week, tomorrow brings core PCE, GDP, and jobless claims at 8:30 a.m., but the real event is Friday. CPI is expected at 3.4% year over year, a massive jump from 2.4% prior. That is unpriced risk. If CPI surprises to the upside, this entire rally could reverse. Scenario analysis. 45% probability for a pullback in base. Price tests 6,790 to 6,810, consolidates, then pushes for 6,848 to 6,900. 40% for bullish continuation straight to 6,900 and beyond, and 15% for a bearish reversal if the ceasefire breaks or CPI shocks higher. The pullback and base path remains the most likely outcome after such an extended gap. The primary setup is long on pullback. Entry zone 6,790 to 6,810. Stop loss at 6,750 below equilibrium. Target 1 at 6,848, the overnight high retest. Target 2 at 6,900, the combo strike zone. Risk to reward ratio of 1 to 2.25. The positive gamma zone at 6,800 provides a structural support base for this trade. A 174-point gap on a 2.61% move is not normal. The speed of this shift from war premium to peace premium in under 24 hours shows how quickly institutional positioning can flip. But the Saudi pipeline attack is a reminder that this ceasefire is fragile, and Friday's CPI is a risk that hasn't been priced yet. Full analysis linked in the description. Good luck.